Hey guys, Jonathan here at ForexSchoolOnline.com. I wanted to throw on the video tonight to do a bit of a recap of the week just gone. A really quick video for what I'm looking at this week and where I'm trying to look for trades this coming week. It's Sunday night my time. I have a set routine, so every Sunday I'll bring up my daily and weekly charts and I go through and mark my levels and start to get a feel for where the next week could possibly go. The first thing I start to look for on my daily charts is the obvious trends that are in play. Are there any obvious trends moving left to right, up or down? Okay. The first chart I've got on at the moment is the GBP New Zealand dollar daily chart. You'll see clearly we're making new lower lows, new lower highs, and we're in a clearly defined downtrend. Okay. The next thing I do after I've defined an obvious trend, just before I move on, as I often talk about, Forex pairs are more often than not ranging. Okay, so most people are trying to look for a trend in every pair, and more often than not, there's no trend to be found. Okay, you'll find a lot of chop. Okay, so more often than not, prices moving up or down and chopping. We need to try and find these really solid trends, and then not just jump in from anywhere, but look for solid areas of value or key support, logical areas to get long or short. So we had this downtrend in place here. You'll notice this bearish engulfing bar. So price found a low, it retraced higher. A bearish engulfing bar which has kicked off the next move lower. So the simple area I'm looking at now, the simple logical area, if I move this chart over, you'll see I've got a horizontal line marked in this area. That's simply where price moved down, found support, bounced higher, and has now busted through. It's the it's the old support, new resistance, and vice versa for the trend moving up. So this area now, this old swing point, this old support, new resistance area is where this week I'll start to look for reversal signals to get short. I'll look on the daily charts and also the intraday charts. I don't normally like to go below the 4 hour, but occasionally when you have these very solid levels, you might get a nice reversal, say a pin bar, or a bearish engulfing bar, or something similar. Okay, so we're looking for reversal signals at this area. The next chart I want to flick over to is the US dollar CAD. The reason I want to discuss this chart was because it got spoken a lot about in the members area, over at Baby Pips, and around the traps. The particular setup that was discussed was the bearish engulfing bar here. Okay, so it was up at a swing high. If we zoom this chart out, you'll see that it did form at a logical resistance area. Going back, we had this area through here. Okay, so it did form, here's the bearish engulfing bar here, it did form at a logical resistance area. There was one main problem for this setup that was highlighted by a few people, and that was the number it was trading into. At the low, just underneath this bearish engulfing bar, was a very big round number of 1.00. Okay, so I've just put that's right there. Okay, 1.00. Now the reason these can be so important in the market is because a lot of massive orders get filled around round numbers, and B, they become self-fulfilling. The more people that start to look at these round numbers and set orders around them, they become self-fulfilling, and price will reject them. Okay, now obviously it's like support and resistance. They don't always reject, but we play with the probabilities on our side, and we don't trade hoping to break through levels. We trade to levels and then we trade away from them. You'll notice that price moved down, so it broke the low of the engulfing bar, moved down, popped through 1 pip, and then has now burst higher. So this was just something I want to go over and recap. You've got to keep these levels in mind when you're trading, especially the very big round numbers. The round numbers not so much. So when you've got a round number, you still want to take into account, but you just want to know they're there and try not to trade into them. These very big round numbers are the ones you really got to keep an eye out for. When the round numbers also match up with support and resistance, you can see in the past that price has respected them. That's when you start to look in a bit closer. But the very big round numbers, whether or not they're being respected, you need to keep them in mind and try not to trade into them. Going back to looking for trends, the last few months in particular on the Japanese yen pairs, there have been some really solid trends in place, some really obvious trends. Now, the one thing that happens quite often when we have these strong trends is price won't pull back as large as we'd like. We need to keep this in mind because we like to see price move up, retrace to get long again. But quite often you'll see when we've got these strong trends, price will only move back a small way before continuing. Okay, so see all these small movements before continuing. These really strong trends are the trends, they don't happen all too often, but when they do, you can really cash in and ride the waves and look for the trend to continue. The best way to play these is looking for the retracements on the intraday charts, such as the 4-hour or the 8-hour chart, because the retracements will be bigger. So what that means, if I zoom into this chart, you'll see that we have a small retracement here and a small retracement here. These look a lot bigger on the 4-hour chart, so they're only 1 candle retracements here. There might be 5 or 6 candle retracements, and they'll be looking like proper large retracements with more value. This is the US dollar Japanese yen daily chart. If I mark a level through one of these retracement points, okay, so through here, you'll see that just there. Okay, so price is clearly in this uptrend. It moved down, rotated lower, balls got back in and continued the trend higher. Now, covering off that point about looking on the intraday chart, if we then go to the 4-hour chart and look at this same level, okay, so I'll slide the chart across. This was where this bullish engulfing bar formed that a lot of people got on. Okay, so we had this uptrend in place, still moving up. And this is this retracement. Now, all this was only 1 candle on the daily chart. It was one candle retracement. You can see what I mean, how the pullback or the rotation on the 4-hour chart is a lot deeper, and it gives a lot better value trade. So on the daily chart, the rotation is small, but we can see here that we're getting it at a support area. Price is tested, and you can continue to ride this trend higher. Okay, so just keep in mind when you're playing trends, especially the really, really strong ones, that quite often you won't get the large rotation back into value that you'd really like, but you can hunt for those rotation levels or value areas on the intraday charts. Now, another chart showing this point is the Singapore dollar Japanese yen chart. I just wanted to pull this chart up to highlight the point that when strong trends are in place, the retracements can quite often be very shallow. So you'll see we have this uptrend in place. We get a small rotation lower here, and then we get a bullish engulfing bar, and the trend continues. Now, whilst I wouldn't take this trade off the daily chart because there's no value at all, seeing this pullback in such a strong trend would be a tip-off to start looking on the smaller charts, such as the 4-hour, the 8-hour. Seeing this rotation, we can see that the trend's in place, and we're looking for value. We're looking for any rotation back lower to get in value to trade back higher. Now, the other way to play these markets is continuation and breakout trades. I'm not going to cover that here, but it's something to keep in mind, especially for these strong trends. I hope you enjoyed this video, and I hope you have a really successful week this week. If you want to learn anything more or catch up on the commentary, just jump over to forexschoolonline.com. I'll talk to you in the next video.